In a recent portfolio update, I demonstrated the effect of drip-feeding spare money each month into UK large-cap companies and holding for the long term. I showed how much I had invested and what it is now worth 13 years later. The portfolio had increased in value by more than £100,000, but what I didn't show was how much of this gain came from dividends. So in this video, I intend to show how important dividends are in my total return. None of this is investment advice, I'm just showing you my own journey. In the chemical sector, I only own one company, Croda, and I only started investing in it this year as I sensed a bargain. Croda doesn't pay a huge dividend, but they grow their dividend over time, and I'll explain more about that later. That's £29 from the chemical sector so far. Next up is a couple of exchange-traded funds. The first one gives you exposure to all the companies in the FTSE 100 and the other the S&P 500. I've held both for 3 years and in that time I've received £1,435. In the aerospace sector I have only one dividend-paying company, BAE Systems, and I've held them for 9 years. They pay a 3.2% dividend and I've been paid just over £2,000 so far. In the retail sector, I only hold Tesco, which has a dividend yield of 5.8%. I used to hold Sainsbury's as well, but that was sold a few years ago. Total dividends are just over $2,200 from the retail sector. Next up is renewable energy, and I have 3 companies which I've held for a few years. These companies are involved in solar and wind energy as well as battery storage technologies. Total dividend is just over £2,600. In the mining sector, I only have one company, Rio Tinto, but I've owned others in the past. I find mining incredibly volatile and highly cyclical. These days, I just stick with Rio Tinto. Total dividends from the mining sector is £4,000. And don't forget, if you make good use of a stocks and shares ISA, then all your dividends will be tax-free. In the consumer staples sector, I have 2 companies, Diageo and Unilever. Both companies sell strong brands which are resilient in recessions. They both benefit from having economic moats, which makes it extremely difficult for new competitors to challenge their market dominance. Diageo has a yield of only 2.1%, but the company has raised its dividends consistently year after year. If you had invested a lump sum in Diageo 10 years ago and left it there, you would now be getting 4.2% passive income on your original amount. This phenomenon is commonly overlooked by investors. If you are really into dividend investing, then try to look for companies which show dividend growth like Diageo. A really great website to look for this information is Dividend Max. Just type in the company name, then scroll down and click on Annual Dividends. If a company consistently raises its dividends, then that's a very good sign. Here is the graph for Unilever. There are a few bumps in the road, but the trend is upwards, and that's what we are looking for. The total dividends I've received from these 2 since I started is just over £4,700. Just before I move on, if you find any of this useful, then please give the like button a quick tap, as it really helps out the channel. Thank you. In the banking services sector, I have 4 companies. I've held Barclays and Lloyds from the very first day. It's been a very bumpy ride indeed, but the total dividends received is over £9,700. In the food and tobacco sector, I have 3 companies. Tate & Lyle is a relatively new addition, but it's a solid, well-run company in the FTSE 250. Here is the dividend growth, and things are heading in the right direction. Tate & Lyle has a history of raising its dividends. Total income from food and tobacco is over £9,800. In the insurance sector, I have 2 companies, Aviva and Direct Line. I've held them both for quite a long time, as you can see. The yields at the moment are very high and may not be sustainable in the long term. Sometimes dividend cuts do happen, and this often spooks investors, leading to a share price fall. Dividends so far are just under £10,000. Now we have reached the sectors which have paid the most passive income. At number 3 are the pharmaceutical giants of AstraZeneca and GSK. I've been investing in both for over a decade. Dividends have reached over £11,000. With dividend investing, the dividends can really mount up, so make sure you use a stocks and shares ISA to protect them from tax. I have one on the Barclays Smart Investor platform. At number 2 is the utilities sector. The first 3 of these companies I've held for around a decade, but have since sold the water company Pennon. The dividends have been large and relatively reliable. Look at the dividend growth for National Grid. It's a money-making machine, but be careful, There is political risk with this sector, especially if there is a change of government. This is always at the back of my mind. Total dividends from the utility sector is over £13,000. And now for the most lucrative sector of all in my portfolio, oil and gas. I've held BP and Shell for over a decade, trimming them when they are rocketing upwards and putting extra money in when the share price is low. These three companies were all sold long ago. The share prices with these three just seem to be on a never-ending drift downwards. I'm not usually one for selling, but I have no regrets here. The total dividends I've received for oil and gas since I started my portfolio is over £19,000. Now for a quick look at some other companies which have paid me dividends but which I have sold for various reasons. The one I want to give a special mention to here is the house builder Persimmon. I used to own Persimmon over a decade ago. The house builders were recovering from the last financial crisis and I bought Persimmon at £6 and sold at £8, snapping at a quick profit. Then to my dismay it rocketed on to over £30. I'll try not to make that mistake again. It's fair to say that Persimmon is on a downtrend this year, and I'll be looking to buy the shares again when there is maximum pessimism. But next time I'll be holding for the long term. With investing, every day is a learning day. Another mistake I made in the early days of investing was buying shares in a pub chain called Marsden's. I had bought the shares only to obtain a privilege card that gave me 20% off food bills. Over the years I probably saved around £100 on food, but I lost more than £500 when the shares started to fall. To see other mistakes I made along the way, then click on the link above. So what about that overall gain in my portfolio of £121,000? How much did dividends contribute? Well, the answer is £96,000. My portfolio has experienced capital growth as well as a stream of passive income. But hopefully you can appreciate the huge impact that dividends can make over the long term. This graph shows the individual year totals and you can see the effect of COVID in 2020, but also how quickly the passive income stream recovered in 2021. If you want to see further updates of my investing journey, then why not subscribe to the channel? For a beginner's guide to starting your own investing journey like I did, then check out this video. To see my record-breaking dividend month, check this one out. See you next time, and happy investing!